All right. Good morning, all my favorite people. How's everybody doing today? Hopefully, ready to get moving, get a little work done, right? A little bit of action this morning going on in the market. Some of you guys are keeping busy, some of you guys are holding off. Either way, hopefully, it all revolves around your rules. Can you guys hear me okay, guys? Give me a Y in the room. Make sure I'm coming through loud and clear. Okay, awesome. Good morning, David S. Good morning, Daniel. Good to see you, Mohammed. Nice to see you this morning. Hope everybody had an amazing weekend. Spoiled your moms if they're still with you. If not, spoiled the mother of your children. Or hopefully you got spoiled. Good morning, Bobby T. Um, Excited about the week, guys. I always spend the weekend reflecting a little bit. What's going on? What's wonderful in the world of trading? And guys, patterns, plans, right? Was talking with my brother a little bit this weekend, and he did hours and hours of market replay, right? Always looking for that one thing that makes him better, that makes him more consistent, that keeps him on the right side of things. And I had this moment. I'm like, why doesn't everybody do that? Why doesn't everybody put all the effort they have into learning a plan, into creating these rules, into being consistent? And I think it's just human nature, guys. Work feels like work, right? But what's the reward for the work? And that's what we're going to talk about today. My goal today is to give you the most simple trade you've ever seen, guys. The high probability trend trade, the trade where each indicator lines up on every chart, giving you a statistical advantage, right? Putting you in a position to take a trade that typically wins 70 to 80% of the time. And then I want you at some point during the day to ask yourself, why am I not only taking this trade? Why am I searching for everything? Because, guys, let's be honest. Your goal, and I want you to think about how this works out. If you can make $250, $300 per contract a day, right? And that's it. How meager, how easy, how small is that goal per contract? Guys, on a two lot, that's 600, right? And even if that's your bare minimum on the day, you're looking at a $3,000 week, guys. You're looking at a $12,000 month. And the reality is simplicity. Looking for maybe that six-figure income coming from trading. Isn't that the goal? Everybody wants to make money, right? So let's focus on how to make money. Let's focus on statistical advantages. And I'm going to show you how, and then it's going to be up to you to do a little bit of study, to ask an awful lot of questions and make sure that you're comfortable. But before we do anything, forexfactory.com, guys. Monday, May 15th. Can't believe we're the middle of May already. We had the Empire State Manufacturing at 8:30, and it did move the market a little bit. 9:15. One of the FOMC members is going to speak. It is low impact, but if he says something kooky crazy, somebody may react. It's important to understand where these news releases are. I don't focus heavily on what the news releases are. I'm really just focused on knowing that it may move the market a little bit crazy. And I do that every morning. That's kind of what gets me going. And then, guys, we're going to talk about the high probability trend trade today. Each indicator, every chart lines up for the trade. Each trade gives you a set of advantages, right? And this is your recipe for a trade. Momentum plus a clear path plus an entry area gets you into the market. This is your high probability trend trade. This is a trade. If we go straight to the glossary of common terms, this is a trade where each indicator, every chart agrees for the trade, strongest triggers, no termination conditions, no trouble spots between your entry and your target, guys. It's only three rules. Embrace simplicity. It doesn't have to be difficult. You don't have to run 5 charts. You don't have to have a checklist with 17 things on it. If you spend your first 20 trading days focusing on this highest probability trend trade, and understanding that it happens on only 2 charts. Your first 2 rules are met on the 13-2. Your 5-1 is your entry chart. This entry chart is going to let you refine what you're reading on a large chart, get you in where the market is likely to continue. Guys, you can reduce risk, you can maximize your profit potential. But if you focus on this one trade, And this is hard for people to wrap their head around, only focusing on one thing for 20 days. The goal isn't to make you the greatest day trader in the world, right? Not in 30 days. Who can do that? This is $1 million job. But what you can do if you stay focused, if you keep it simple, if you're streamlined in your approach, is you can learn to read your charts, guys, because 90% of what you do during the day is only going to be reading your charts. 90%. Waiting for those advantages, those 3 advantages that provide a trade. 10% of what you do during the day is going to be actually trading. Those advantages are present, you take the trades, and that's really how your day is going to go. But that chart reading that the high probability trend trade teaches you is going to have you understanding where the market is likely to continue. You'll use that continuation point for your entry for the high probability trend trade. You'll understand where the market is likely to go using Fibonacci and momentum indicators to help you make smart choices on targets. And then you'll understand where the market is likely to stop. And these are what we call termination conditions. And these areas where the market is likely to stop is a big red flag telling you that the trend may end here. But it also creates an anchor. And if you look at this section that says your first 30 days and beyond, consistent winning trades, the and beyond was put there because it seems ridiculous to abandon this highest probability trade after 30 days, right? Focusing on the 5-1 trend trades, that smaller chart trend trade that happened after a termination condition on the 13-2 chart, this is your best chance for early success, guys. And the impact of only trading after a great top or bottom after a termination condition can't be overstated. And I agree with that wholeheartedly. So what I want you to do today is I want you to take a deep breath and I want you to relax and I want you to focus on the absolute best of the best. And for those of you that are brand new with me, let me give you a subtle reminder on what your path is, guys. How do you get to where you want to be? Everybody in this room at some point has told Nexgen, whether it was John Novak, whether it was your salesperson, somebody has told Nexgen that you want to make money, right? So let's focus on the path to getting there ASAP. It begins with posting your trades in class. When you post in class, you and I get to have a conversation. Everything that you do, you're going to get feedback on. 15 hours every week from 9 to noon, Monday through Friday. Guys, my sole purpose in life is to talk to you about what I see, and then your job is to tell me what you see. So by posting in class, you're going to tell me why you did what you did. Chart annotation becomes key. It lets me know if you're scared, if you're nervous, right? If you're confident. It lets me know if you had advantages in place. Guys, the more information that you give me throughout the day on each of these charts, the better feedback that I'm going to be able to give you. Did you have your advantages? Did you forfeit an advantage? Guys, this is one of the most important tools. The second one is using the spreadsheet. This spreadsheet was provided by Nexgen when you got your software, guys. The first page is tracking everything that you do. Every time you pull the trigger on simulator. This is what I did. This is why I did it. This is how it worked out. Recognizing patterns in the market that are creating successful scenarios for you. And then more importantly, recognizing patterns in yourself that might be robbing you of those advantages. Some people love to trade into those termination conditions. Some people don't care for the advantage of momentum, and some people like to jump in the market with absolutely no regard for where it's likely to continue. All that's okay. All that's what happens for brand new users. It is fixable, but this spreadsheet's going to help you recognize it. Your posting in the room is going to help me recognize it, and then we work together to fix any challenges that you have. And then the second page is your favorite looks, guys. On my spreadsheet here, I'm rolling right around 180 pictures of high probability trend trades. 180 pictures of nothing but entries. And I'm going to share my spreadsheet in the room with you guys. If you don't have one, if you need a new one, if it's time to refresh the look that you have, just steal mine right there from the chat box. But go through. Did anybody do this exercise this weekend? Did anybody go through and click on all of these entries Anybody wake up Saturday morning and said, you know what, I want to make sure I never miss it. I'm going to look at 180 examples so that I can catch it Monday morning. Anybody? No? That's too bad. Well, maybe you'll do it tonight. Maybe, maybe. But guys, using the spreadsheet. Joel, you did it. Strong work. So guys, you're going to post pictures. We're going to fill up that spreadsheet together. Every time you post a high probability trend trade, I'm going to steal it. I'm going to put it into my spreadsheet because I'm a trader just like you, guys. I'm a chart reader just like you. Hey, good morning, Rain. So what we're going to do for this first hour is we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. The rules for the high probability trend trade. You did replay this weekend? Awesome. Did you find it helpful, Rain? Some people do, some people don't. Most people do. You know what I find is that if I'm not in a good state of mind, if I feel rushed, replay's no good for me, but because I can control the speed, it really is. But what it lets you do is it lets you hit pause and really focus on your rules before you pull the trigger. After the fact, right on. The idea is to get it to where it's a before the fact, right? As it sets up, you can pause. It's just like trading the live market. It is. You're just reinforcing good rules, guys. And you're going to simulate your trades daily, right? You're going to post your pictures in class until you're sure you have the correct rules. Don't practice the wrong trades. Don't try to pump up that P&L. Guys, nobody ever bought a pretend house with pretend money unless you were playing Monopoly. So focus on the exercises that are going to make you successful. Simplify. We're going to look at one trade, 3 rules, 2 charts, and you're going to learn them so that they become easy. Guys, 180 pictures of high probability trend trade entries, of medium probability trend trade entries, go a long way to making those looks easy. And then after class, before the next day, do what Rain did, right? Download replay data. Go through, retrade it. Fix your mistakes. Take trades you missed or skipped. And then take pictures, guys. One of my favorite things is when you guys show up Monday morning and say, Mark, I'm sorry, I don't mean to be a pain in the butt, and you're not. But here's 20 pictures from my study over the weekend. I have 20 questions about what I did. Can we go through them? And the answer is always yes. And we will. Take pictures of the correct trades, and then you're going to repeat this process every day until you always take the correct trades. And guys, if you're always taking the correct trades, if you're always following those 3 rules, providing you that advantage, that trade that typically wins 70 to 80% of the time, well, then you should be guaranteeing yourself that you can win, right? And that's when you go to one of those prop firms. That's where you trade other people's money and you test your plan in a real world scenario. So we're going to keep this plan in place as we discuss the high probability trend trade. And everything starts on the 13.2. And it says that the large charts need strong trigger lines. Strong trigger lines provide you the advantage of momentum. So what's a strong trigger line, guys? Let's be able to define it in pictures. Let's be able to recognize it not only in the moment, but historically. Strong trigger lines say that the small triggers are above the large triggers. The large triggers are wide. They're angled in the direction of the trend. And this space created between the two lets me know that the odds are favorable for the market to continue in the direction of the trend. And this is when it is the most favorable for buying a pullback at Fibonacci support. You're going to see these tails on a 13.2 chart. These tails are potential pullbacks on that smaller, faster entry chart, guys. And when you have that odds favorable momentum, when you see these tails, you know that there was a potential trade there. And this is a great way to study historically to test your rules. In a downtrend, smalls below the large are wide, they're angled in the direction of the trend. Once again, there's one of those tails. This is your best look for selling Fibonacci resistance for continuation of the trend. Guys, you're going to hear the phrase odds favorable momentum in class a lot. And it just means that the odds are favorable for the market to continue in the direction of the trend. If you commit to this look, if you commit to these strong triggers, commit to that advantage of momentum, guys, you're going to find that it takes a lot of troubles out of your way. Because when the small triggers work their way back into the large triggers, we call this a weakening of the large triggers. And when you weaken large triggers, anything can happen up or down. becomes kind of a crapshoot. So I'm going to encourage you, commit to that idea of momentum every trade that you take. And guys, as you come through and you look at the market, you can scroll back. This is crude oil. And I don't know if they've had any opportunities today, but you can scroll back and begin to recognize simply where there's odds favorable, right? And then when there's not. And when you see these anything can happen triggers, typically they're followed by some sort of reversal or large bounce. And that's all you're doing, is you're identifying when that momentum is present. So is everybody comfortable with this? It's not a look that spans the duration of most moves. Guys, you're going to be patient and you're going to wait for that best of the best, right? And then there's those tails, those potential entries. You're going to see it in an uptrend. You're going to see it in a downtrend. The advantage of momentum starts the ball rolling. Once you have that advantage of momentum, it's imperative that you have a clear path. And a clear path comes from termination conditions being false. Room to the profit targets are true. So if we simplify this, it says no termination conditions present. That's rule number 2, because when there's nothing in the way, we have a clear path. When we have a clear path, that momentum is most likely to push us to our targets. So how do we identify a clear path, guys? It's just a 2-part process. And it's a comparison of those same trigger lines that give you momentum up against an area, Fibonacci-based area, guys. And this picture shows you the areas that you're going to use for that comparison. Divergence highs, divergence lows. The formation of the cyan line to the right or a magenta line to the right from a pivot lets you know that there was a loss of momentum at that pivot. That's all that is. This on its own is not a termination condition. It's when price reaches it a second time. We'll do that comparison. We're also looking at red Fibonacci resistance, yellow 1-to-1s, blue Fibonacci support. And then the easiest way to recognize a termination condition is nothing more than a 2-part process. The first part is your trigger lines are going to reach an area, whether it's support, resistance, a divergence high, a divergence low, 1-to-1s. Price bars are going to come in contact with that resistance or support, and your job is to ask yourself, where are the trigger lines? If the trigger lines are above that area of support, no more trades into that area, guys. It's likely to stop the market. You have forfeited your clear path. Price reacts to Fibonacci is one of the easiest ways to say it, guys. Price reacts. When price reaches one of these areas, both buyers and sellers are making decisions. You have the advantage as a Nexgen user to not get caught up in their decision-making process. So price reaches the area. If none of the triggers break through, no more trades. Guys, here's a pivot with that divergence low. Not a termination condition, but when price pushes up and comes back, price reaches a divergence low, the trigger lines remain above, now we have a termination condition. And this termination condition is what we call a pivot stop out. The divergence line identifies your first pivot. When price exceeds and then trades above and the triggers don't follow, no more short trades, guys. Pivot stop outs can be very powerful termination conditions, and more powerful still when they come from Fibonacci resistance or support. So price reaches resistance, no triggers break through, no more long trades. Back to support, no triggers break through, no short trades. 90% of what you do throughout the day is waiting for your rules to be met, waiting for those advantages to be present. Ultimately, you get the pivot stop out at resistance. This pivot stop out creates a full reversal of the market, provides you odds favorable momentum. Guys, that's your best of the best. That's that anchor. That's that strong top that sets you up for that highest probability trend trade. And you'll get the same look from the bottom. There's that strong bottom, that termination condition that creates a full reversal, that provides you odds favorable. And then there's your tail, guys. There's your absolute best of the best chance for that high probability trend trade. And you're going to see it from highs. We're going to go through, I've got pictures for you I'm going to share. Termination conditions at a high. Here's your pivot, not a termination condition. When it becomes a pivot stop out, now it's a termination condition. The trigger lines remain below. There's one from resistance. There's one from 1-to-1s. Guys, I'm going to share these with you. Please feel free. Steal them. Put them in your spreadsheet. You're also going to see that same look from lows. Price reaches 1-to-1s. Absolutely no trigger lines break through. And it ultimately creates a full reversal and gives me odds favorable momentum. That's what we call a strong bottom. There's one from support. And then here's one of those pivots that becomes a termination condition when it develops into a pivot stop out. So guys, is everybody okay with the recipe here? Price reaches the area. If absolutely no trigger lines break through the area, this is a termination condition. You do not have a clear path. Rule number 2 is not met. When is that path clear? When both small and large break above an area. Now the path is clear. Resistance begins to act as support. And now I see one of those tails, guys. There's my great shot at a high probability trend trade. And then your high probability trend trade, guys, your either clear path or no clear path is going to set you up for the second trade that most of you are going to end up taking. And this is what we call a medium probability trade. And a medium probability trade means that most of your indicators line up for a trade. However, a small issue exists. Your small issue may be that the area hasn't broken yet, that you don't have the advantage of a clear path. Because when price reaches resistance and the small triggers break through with odds favorable momentum, but the large triggers have not, 6980 becomes an area with the potential to break, but it has not yet broken, which means that your path isn't clear yet. Guys, this is what we call a medium probability look. 50% of your triggers are through, 50% are not. This is a 50-50 trade. You're going to hear that in the classroom a lot. When you have this 50-50 trade, your job is to make sure that you don't forfeit any other advantages. Make sure that you're not giving up momentum. Make sure that you're not giving up momentum on a smaller chart or taking any chances, because this is not a high probability scenario. And we're going to see these throughout the day as well. But this pretty much gives you the whole run of the gamut, guys. Price reaches an area, no trigger lines break through, no more trades into that area. Both the small and the large break through, the path is clear, looking for that entry on the 5-1. And then you've got that where the market is likely or has the potential to break this area because of the odds favorable momentum. But until we get both sets of trigger lines above this resistance, this is an area only with potential. And you'll see down here, we had that 50-50, and ultimately it holds. And the market moves back up. So we're going to talk about entries, and we're going to talk about determining that best look for entry when you have a 50-50. But there's one more termination condition that I'd like to talk about. Sometimes your market turns from nowhere. Sometimes it doesn't reach Fibonacci. Sometimes your trigger lines break through. Or sometimes you have odds favorable momentum and we haven't reached an area. This final termination condition is going to help you identify by using your smaller, faster chart, your 5-1 chart, when change may be happening on the 13-2. And this is 3 divergences in the same location. And 3 divergences may terminate the trend. Pretty simple. What's a divergence? It's a loss of momentum at a pivot. We see that cyan line print to the right, that divergence line print to the right. These 3 losses may terminate a trend. It becomes even more powerful when the small triggers work their way inside of the large. Remember, going from that odds favorable momentum to those anything can happen triggers, it lets you know that the potential of the market turning goes up a little bit. And then when that final pivot is higher than the previous, that third pivot's higher than the previous or lower than the previous from a high, now we've got that head and shoulders pattern, guys. So you'll see this on your 5-1. Maybe it'll look like this at a low. It'll look like this at a high. But it's going to help you identify that change on the 13-2, guys. And you can kind of respect the will of the market a little bit by recognizing these divergences in the same location. Is everybody comfortable with termination conditions? Quiet Monday, I get it. Why do we respect termination conditions? I found this picture in the archives. Guys, this is 5 time frames. In the highest time frame, looks like odds favorable momentum, 50-50, right? This is a 34-5. When you whittle it down and refine it a little bit, you'll notice that you begin to get weaker triggers at that same Fibonacci area, and the market's going up and down. When you come over to smaller, faster charts, guys, you can see that reaction at key Fibonacci areas. And this is why we let the market break the areas, or we let that area hold and reverse the trend before trying to trade into them. Nexgen users, you have this amazing advantage. All you have to do is look at your charts and identify this is an area where the market is likely to stop, and it pulls you out of that. But the flip side, if you have odds favorable and no termination conditions, guys, you may be looking for an entry, and I know that these are the pictures that some of you guys are showing me right here. You can identify where that market is likely to continue, and by doing so, you can put yourself in a position to take that highest probability trade. And I know that that's what everybody's showing me right now. Great trade, guys. We're going to come back and talk about it, but before we do, we're going to take a look at the entry rules because we want to make sure that everybody's following rules, right? So when we have the advantages on the 13-2, when we have momentum, when we have no termination conditions, this is the look on your 5-1 chart. 13-2 should be in an uptrend. Everything is strong. You have odds favorable momentum on your 5-1. Your large triggers are wide. They're angled in the direction of the trend. They should be overlapping one another. That's what we call a favorable large trigger, is when both your large and your synthetic, both are large triggers. When they are overlapping, strong in the direction of the trend, guys, this is going to give you the smallest window of opportunity. This is going to give you the tightest, most consolidated area where the market is likely to continue. And when we talk about the rules for a high probability trend trade, we talk about that entry. Rule number 3 says that we are going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers, guys. And this is going to give us that third and final advantage, that recipe for a trade, that entry area to get into the highest probability trend trade. So we need to determine that window of opportunity. Where's the market likely to continue? So when everything is going up, you're going to focus your attention on fibs, mid-bands, and one-to-ones that are falling inside of these favorable large triggers. And these will be the areas that you're looking at for entry. But the rules say that we're going to use a limit order to buy or sell a pullback. And a pullback begins with a reversal bar. When everything says up, guys, we're going to let the market push down. And it seems crazy, doesn't it? Everything is up. The momentum is up. Everything is screaming with nothing in the way. Guys, this is your large chart. This is your group mentality. This is your large group. The large chart, the big charts define direction. The big charts define area. Your smaller, faster chart is this little group of yahoos that want to fight everything that's going on. These yahoos, guys, are going to get us back to our entries. And it starts with a reversal bar. And at the time of the reversal bar, I'm going to put a circle around my triggers. Large triggers, synthetic triggers, up, wide, one on top of the other. And I'm going to look for the areas that fall inside, fibs, mid-bands, and one-to-ones. Your job as a high probability, rules-based trader is to right-click and activate a limit order at the top of that window. And you're at the top of the window because of the momentum, because there's nothing in the way. Guys, I'm going to right-click right here at 79.20, 79.21, just above. And if the market comes back to that area of support inside of favorable large triggers, remember I'm entering at the highest point, I'm now in a long trade. And I'm in this long trade, and I think that this is the part that's so important to remember. Not because I had a feeling it would happen, not because I hope the market goes up, but because I have the advantage of momentum. And I recognize that advantage on my 13-2. Because I had the advantage of a clear path, once again, I utilized the 13-2 chart to make sure no termination conditions were present. And then, guys, I used a 5-1, a smaller, faster chart, a refinement chart to identify the area where the market is likely to continue. My original protective stop will go below that window of opportunity where the market shouldn't go. And guys, this is a trade that I will take 1,000 out of 1,000 times. This is a trade that when you have that termination condition providing a full reversal, when you couple that with odds favorable momentum with no termination conditions and you're patient and you wait for that pullback to the area inside of favorable large triggers, guys, this is a trade that typically wins 70 to 80% of the time. Let that resonate. 70 to 80% of the time, it has the potential to hit that profit. What does that mean? That means that 20 to 30% of the time, you might take a little bit of a hickey, right? It may come down and it may hit that stop outside of the window of opportunity. And if it does, that's okay, guys. It's a cost of doing business. I would encourage everybody to run fast from anybody that tells you that you will always win, because you won't. You don't control the market. What you do is you create an opportunity for you to have a statistical advantage, and that advantage comes through strong triggers, through no termination conditions, and then identifying that area inside of favorable large triggers where the market is most likely to continue. Guys, you're going to be able to do this on simulator during the day. You're also going to be able to do this historically, right? And let's show you that historical example. When we come to the market, guys, if all I do is circle the tail when rules 1 and 2 are met, is everybody comfortable with this? Odds favorable, no termination. If that circle lines up with an area of support inside of favorable large triggers, guys, congratulations, you just found the highest probability trend trade. Your job is to take this picture. Here's the hard part, guys. You have to work a little bit. And use that call out tool. Odds favorable momentum. Yes, rule number 1 is met. No terms. Yes, rule number 2 is met. And then, guys, this is, I think, the most important thing that you can write. Area for entry inside of favorable large triggers. Sorry, I'm a little slow today. There we go. 3 advantages, right? Straight to Fibonacci resistance. Doesn't this look just like the picture from the manual? So all you're doing is you're trading patterns, guys. Once you take this picture, save it to screencast, right? Make it forever in the cloud and grab that link provided and get it to the room, and let's talk about whether or not you followed rules, right? And then the next thing is, if you know it's a perfect entry, if it's verified, come to your checklist and put that same link into your checklist so you can come back and study the entry. High probability trend trade log. I know exactly what it looks like. And then there's D, taking that high probability trend trade. There's Gary, taking that high probability trend trade. And there's Jose, taking that high probability trend trade. Guys, 3 gentlemen taking 3 trades from different parts of the world with that exact same entry, with that minimal risk, with those beautiful, using Fibonacci targets. What an amazing trade, guys. Great job. So I'm just going to ask you, give me a Y in the room if you're with me, guys. We went through it a little quicker. If your goal is to make between $200 and $400 a day, guys, we're going to show you how to do it with a high probability trend trade. You're going to be able to come in, and the reality is you just hit your goal almost perfectly in the first trade that provided all these advantages. Now we're going to use the market a little bit. We're going to watch the live market. We're going to look at your pictures, guys. But before we do that, I'm going to give you a couple things. Your first 20 trading days are focused on entries and only entries, not worrying about management, not worrying about wins, not worrying about losses, simply finding the absolute best spot to enter the market. Use the phrase, my trade is. Define your entry point. My trade is the high probability trend trade. because I know that this is a trade that typically wins 70 to 80%, that provides me three very distinct advantages. And then you're going to have a checklist, guys. In order to enter the trade, the conditions of this checklist must be met. And then the most important part is show me pictures of your perfect entry, guys. Put them into your trade plan. You're only studying entries. Study them, steal the pictures from class, grab them from the manual. But in the first 30 days, guys, the more pictures you take, the quicker you're going to get to where you want to be. If you take 15 pictures a day, that's 75 pictures a week. That's 300 pictures in your first 30 days. Guys, by the end of 90 days, you're sitting at almost 1,000 pictures. 1,000 pictures of perfect entries, 1,000 pictures of rules being met, of rules not being met, of termination conditions, of odds favorable momentum. Guys, all you're doing is defining your entry. Eventually, you're going to have to do something with that entry, right? So you can clearly define your management plan the same way you clearly defined your entry. Your entry is mechanical. You can use a checklist to make sure that you get it. Now you can do the same thing with your management. If you trade 2 contracts, your initial stop can be 12 ticks. This gives you time to react and to put that stop above or below the window of opportunity initially where the market shouldn't go. It can be moved 2 ticks above or below the reversal bar in the direction of the trade. Taking profits at $100 and $200, guys. Mechanical. Going to break even after the first target is reached. Methodical. Second target will be 200. No room for opinion. Guys, the idea behind this example plan, I'm going to put it in the room for you, and I'm going to brace you guys. If you're not winning 60% plus every day, it's okay to resimplify your plan. If you allow this to be your path for the first 20 trading days, you're going to understand how to read your charts and fluently understand where the market is likely to continue. Those are your entry points. Where the market is likely to stop. Those are your termination conditions. And where the market is likely to go. Guys, that's using Fibonacci and momentum to make an intelligent choice on targets as you grow with the software. The idea is to build a foundation capable of winning consistently, right? As you expand your knowledge through repetition. Guys, I've never had anybody follow this checklist. I've never had anybody use a high probability trend trade checklist and be able to mark yes on every one of these, every trade, and do worse than 80%. It's never happened for me. But what happens is most people get bored, right? Most people say, well, Mark, I don't want to wait for only the high probability trend trade. I'm not really in this to make money. I'm in this to be busy. Guys, you're a professional waiter. It's important that you understand that. If you use this high probability trend trade checklist, you're in a great spot. Most of you are going to branch out to that 50-50 trade because you hate to wait, and that's okay. I hate to wait too. So if you're going to branch out to a 50-50 trade, well, this is where you have to add to your plan. If I take a 50-50 where the market has the potential to break, but it hasn't, my money's worth a perfect entry on the 5-1 if the area hasn't broken yet. No divergence. Strong triggers. Small window of opportunity. Guys, this is your perfect look on a 50-50 trade. Most of you took that exact same perfect look just a few minutes ago. But a 50-50 trade requires a different plan. It requires a different plan for entry. Maybe a set of conditions that say no divergence. And it also requires a different plan for exit. Because when you take medium probability trades, guys, I'm going to get some of this stuff out of the way. When you take a medium probability trade, and that's what a 50-50 trade is, guys, you have to execute medium probability trades. You're going to take them and manage them assertively, which means that you're not going to sit and wait to get stopped out. You're going to identify trouble spots. You're going to get to a zero loss. You're going to manage assertively. And I took a picture earlier, and I think some of you might have taken this 50-50. And this talks about a little bit, what are your rules for a 50-50, guys? With odds favorable momentum in areas that haven't broken, this is your perfect entry. But you have to have a management plan, which means that you have to reduce risk, right? And an if then. If divergence prints, I exit per my rules. If it never prints, I'm in for the ride. And then guys, if you watched crude this morning, that 50-50 ultimately doesn't work. Divergence prints and the market continues up. So it's okay to take 50-50 trades, right? But you have to manage them. Did anybody take this one and manage out? I hope. And then we get into the talks too. Alex, where did it come from? Came from a bad top, right? It didn't come from a termination condition that creates a full reversal, which reduces the likelihood of this trade winning. And I'm not sure. I had this annotated, and let's see if it'll let me go back to it. This was my first annotation. It was a bad top, and I know that the midband's my first target, and it's a 50-50 on two areas. If I take this trade, I have to understand that it has a less chance of winning because I'm not coming from a termination condition that creates a full reversal. Alex, did you keep that in mind when you took it? Because it changes the dynamic, right? Being able to manage it let me know that when this divergence printed, my advantages were going away. My triggers were weak. You could have easily gotten out of this one with quick profits, maybe a little on the second. And that's what we're going to talk about, guys. It's just really being in the moment, reading your indicators, understanding. No divergence, 13.2, small triggers past the mid band. Yep, it was a perfect entry, wasn't it? It was everything that you look for. But it required management. And guys, look at this. The trigger lines exceed. Here's one of those 50-50s, but now we have divergence. Now we have weak triggers, and notice how it doesn't really work. It goes straight to support, no trigger lines break through, bounces back to resistance, no trigger lines break through. But this bad top, just like this bad top, suggests that they might be looking for a higher area. Bad top, mid-band, finishes the move. Bad top, mid-band. We'll see if it finishes the move to 71.10. It's not a guarantee, and I certainly don't have the advantage of momentum, nor do I have the advantage of a clear path. But I can start working on these patterns that help out. And then guys, looking at, this is your S&P, and this is why we respect termination conditions, guys. How's that for a full reversal from a termination condition? And are you guys ready for one of the sad facts of life? You never got an entry. All this movement, you never got an entry. It's just not your trade. So guys, I'm going to go to the second half of the day real quick. Actually, you know what? We're going to finish off one more thing. And then we're going to start looking at all your pictures. We're going to start going through, because remember, class is two parts. Class is talking about advantages, recognizing rules, understanding when they're present. And guys, that's your first 20 days. Work on those rules. I just kind of want to reiterate what the path is for you guys. To minimize your learning curve, post your pictures or trades in class, every trade, win, lose, or draw. If there's anybody in this room that isn't comfortable taking a picture, that isn't comfortable annotating a chart, guys, I want you to do me a favor. It's okay. There was a point where all of us were uncomfortable doing it. Raise your hand and let me know, and we'll go through TechSmith Capture, right? Or we'll go through Snagit, and we'll make sure that you're comfortable taking that picture, because, guys, everybody that's ever been successful in this world has had some sort of coach or mentor. Whether it was Tiger Woods or Michael Jordan, Wayne Gretzky, right? Serena Williams. I'm using sports. Some of the greatest minds in the world had mentors. Guys, take advantage of the coaching that Nexgen provides. 15 hours every week. Get feedback on what you're doing. If you win and the rules are wrong, you may have a short-term victory. But you're practicing long-term failure, because if the rules aren't met, if your rules don't provide a statistic advantage, and you're just looking for that quick little P&L dopamine kick, guys, you need to make sure that it's repeatable. And how are you going to know the difference? You need feedback. We're here to help. And if you place a trade on the simulator, you participate in class, there is zero risk of loss or capital. Your job for the first 20 days, really for the first 5 to 10 days, is just understanding that yes, absolutely, what we teach, the software that we provide, the feedback that we support you with, guys, it puts you in a position where you have the potential to make $250, $300 a day through patience, through chart reading, putting yourself in that best shot. You need someone to tell you what you did wrong or right, and it's part of the educational magic, right? Using this outline for education, guys, this is that same one. I preach this every day. Post, post, post. Whoever posts the most typically wins the most. Use the checklist. Every time you get into a trade, guys, mechanical, right? No opinions. I'm putting that checklist in the room for you right now. Please, please, please steal it. I'm also putting this PDF file in the room. It's going to have links to everything that I open and show you. Post your trades in class with the entries and exits along with the rules annotated, or copy paste your checklist right onto your chart if you have Snagit. You can literally just drag your checklist onto your chart. Were your rules met? If they were, here it is. Mark, this is what I'm doing. If you don't have Snagit and you have TechSmith, take a minute to write it out. Guys, I prefer this for new students because every time you write a rule, you're reinforcing that rule. Every time you write out mid-band inside of favorable large triggers, you're identifying the conditions that have to be met. I believe wholeheartedly that taking the time to write on your chart makes you a better trader faster. Insert the trades that follow the rules into your spreadsheet. They have to be studied and memorized until executing the correct entries becomes second nature. So once again, guys, 180, 185, 190, wherever I'm at, of a rules-based entry. It's becoming easy for me because I keep looking at it. Once you have your entries, mechanical, define your management plan. Guys, here's a look of that mechanical management plan that we talked about. Your initial stop will be 12 ticks, adjusted above or below the window of opportunity. The stop will be moved 2 ticks above the reversal bar in the direction of the trade, right? Perfect entry, stop where the market shouldn't go. Once the market gives you a reversal bar, that risk is reduced. Your first target is $100. Super easy, dopamine kick. And if everything's right in the trade, you're going to find that $100 getting hit a lot. And now there's nothing to do. You're either stopped out or it hits that target, guys. But if it hits that target, it's $100 in the bank that nobody can take from you. And now your new stops break even. You have absolutely nothing to lose as you try to reach that second area. So either that second area is hit or you're out break even on that second contract. But if it's hit, guys, this is a $300 trade. 2 contracts, $300. Do this 3 times a day consistently. You're never going to work another day in your life, right? Keep it simple, keep it focused, embrace advantages, and guys, keep it mechanical and methodical. And if you allow yourself 30 to 90 days to practice the mechanical approach to a checklist-based entry and a $100, $200 automated exit, you can adjust your targets based on experience later, right? Keep it mechanical. You can alter your plan when you're done with the education. But guys, if you're winning 70% of your trades, why on earth would you want to alter your plan? Just throwing that out there. And then once you get to where you need to be, you're comfortable with your execution, your ability to follow rules, guys, this is where you use one of those prop firms. You go in, and rather than risking $5,000 to $10,000 of your own money, you're risking $50 to $300 maybe, and you're trading their capital, and you're proving that your plan works by passing their funding requirements. Trade other people's money, right? And starting out, use their money. You're going to thank us later when you realize what you do not know yet about yourself. Trading live changes the plan sometimes. It's that old Mike Tyson. Everybody has a plan until they get hit in the mouth. Guys, going live is your first opportunity for you to recognize how you're going to react to that pressure. And when you can make money in a real world setting with someone else's money, trade your own, no worries. Remember, there's no penalty for being cautious when you start trading live. The actual harm comes from thinking you're a better trader than you are and blowing out a large sum of your capital. Guys, most traders stop trading rather than continuing education because they blow themselves out of the game. There's no reason to do that anymore. This is kind of like the Uber for the people that like to have 6 or 7 at happy hour. There's no reason to ever risk a DUI anymore. There's no reason to risk blowing out accounts anymore. So guys, that's your plan. I put that in the room for you. Everything revolves about understanding where the market is likely to stop, where it's likely to go, and then taking advantage of it. Resistance to support to resistance. Notice how none of the trigger lines break through? That's a great termination, creating a full reversal. The full reversal gives you odds favorable momentum. Not a high probability, guys. It's a 50-50, right? The smaller through, but the larger not. Divergence is printed. And look at it sail up past that window of opportunity, guys. Rules keep you safe. All right, on that note, I'm going to take a few minutes. I'm going to leave you guys with crude oil here. Let's see how these Fibonacci areas react. When I come back, we're going to look at all the pictures that you guys have posted. If you have questions, I want you to post them in the room. You know, I've said this before, and I like to say it again, and this is going to sound weird. Whoever works the hardest to prove that I'm full of crap is probably the person that's going to get exactly where they want to be, guys. So go through that study process. Take those pictures. Focus on the rules. And more importantly, blow up that 13-2 chart and go look for the rules to be met. Circle those tails. Guys, you have 10 days back every time you open this up. Go through and look for opportunities. See how many times they come to fruition. I think you'll be pleasantly surprised. I'll be back in just a few minutes. When I get back, we will continue on. Back in a few, guys. Welcome to Nexgen. Welcome to the classroom. Good to have you. Good morning, Ziva. All right, guys, we're going to go through, and I'm going to start looking, and I want to, just for grins, right? Call me crazy. All I ever do is talk about advantages, right? What are the advantages, guys? Look at that. Termination creates a full reversal, gives odds favorable momentum, and everybody's thinking, go, 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 short, 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 right? But I have 1, 2, 3 areas that haven't broken yet. 3 areas with the potential to break, but haven't broken, guys. This isn't a small issue. This is multiple issues. And then I have divergence that prints on the 5-1. Does everybody see this? Does anybody have a rule for this type of trade? What's your scenario? Some people will take it, some people won't. Some people will wait for a market flow signal if you're using an 8-range chart. But the reality is, guys, do you see how you've given away a clear path 3 times? And then you've coupled that loss of a clear path with a loss of momentum on the 5-1. Guys, this is the trade that most of my new users, so easy not to take it, right, Alex? It should be. This is the trade that most of my new users take and lose. Hey, Jerry, great job on the picture. Nice job. It's good to have you. So, Alex, your rules say don't take it, right? How many times do you suppose that keeps you out of trouble? And that's opposed to what? With no divergence. Love it. Advantages, guys. It's all about advantages. All right, so I'm going to scroll up. I want you guys to see what I'm doing just so you don't think that I'm ignoring you. I'm scrolling up like this to get to the pictures that you guys have posted. So I go from the top of the chat box to the bottom of the chat box. I go back and forth. If I ever miss one of your pictures, do me a favor. Let me know. It's never on purpose. Safia, 50-50 trade, no divergence, beautiful entry. Look at you, medium probability. Great annotation, letting me know what you see, letting me know what you think. There was your entry, beautiful, just below the area of resistance, inside of favorable large triggers. Stop, where the market shouldn't go. And then your exit, easy exit, right? Just above the trouble spot, I'm assuming. Uh-oh, guys. They just kicked me out. I'll be right back. My apologies. Sometimes I get booted. Dun, dun, dun. And I still like that you guys tell me that you lost me, because I lost you too, Tony. But I'm back. We good? Awesome. Beautiful entry. Creates a manageable trade and a medium probability. And this is a pretty easy 3 points on 2 targets, 6 points. What is that? That's a $300 trade. Safia. Beautiful. Checklist-based entry, mechanical exits on a medium probability trade, and you nailed it. Same thing here, medium probability. 50-50 from a bad bottom. Divergence prints, but you get in at the area, you make that choice to take it. Perfect entries create manageable trades. Quick profits on a medium probability trade, another divergence prints, and it gives you an opportunity to get out break even. Safia, beautiful trading. Virtually no risk on that trade as you get into it. Jose, odds favorable, no terminations. Perfect entry right at the area. Jose, I made a picture for this one. And guys, remember when we talk about that mechanical approach to management? 2 ways to do it. Jose, you could have moved your stop below the reversal bar. Really tightened up that risk there if you wanted to, but Jose made the decision to keep it behind all the areas of support likely to hold. I know why you did what you did, Jose. Um, it's a good looking trade. It was right at news, and it just didn't work out. You closed it when divergence printed. Yeah. I think that you did everything as well as you could. You had the advantage of momentum, right? You had the advantage of a clear path. You had the advantage of entering where the market is likely to continue. Without a doubt, you absolutely nailed it. And guys, I just got booted again from Discord. I'm coming back to you right now. Almost there. I'm not sure why Discord's messing with me today, but it is. Let me share my screen. There we go. Then Tony, you're missing fibs. Yeah, you appear to be missing. We have a pretty different scenario, don't we? You reloaded NT8 last night. That's what your charts look like. Don't have 3 fibs on your 13.2 like you have. Tony, do me a favor and just right click. Because this is a 13.2 at 85. This is a 5.1 around 87. And then this is a 5.1 and a 5.1. Are you running your synthetics on the 13.2? It looks like you are. You may, if it's concerning, get with Jason and see if he can see if there's a setting that maybe is a little out of whack. Sorry, I know that's not as helpful as you wanted it to be, but sometimes Jason's our best bet, right? And then Safia with another one. Guys, this is what we do. We talk about rules, and then we just start seeing how you're doing following them. And then Safia says the gap theory means that Fibonacci has been reached. Let's talk about the gap theory for those of you that aren't familiar with it. So the gap theory, guys, if price pulls away from synthetic triggers too fast and too far into a Fibonacci area, very often it snaps back to those triggers. Price pulls into Fibonacci resistance. If your large triggers are a full bar away, meaning that they are below the reversal bar marker or perhaps above the reversal bar marker when price reaches these areas, this is the gap theory. And very often the market will pull back and close that gap to the trigger lines. Safia is recognizing this one right here, that it has the potential to do that. So she's saying that she's just going to wait a minute before she takes this trade. And you're also directly into that termination condition. So great read, guys. 4 types of pictures that I take every day. And I want you to... I take pre-trade pictures. Pre-trad. I take pre-trade pictures where I'm verifying that my rules are met before I enter the market. And it's a way for me to take a snapshot to recognize momentum and no termination conditions. I like to take entry pictures. Once I enter the market, I'll snap a quick picture. I don't necessarily have to annotate it in the moment, but I like to see, did I get in? Were my rules met? I like to take a during the trade picture, because what I find is that during the trade, especially if I'm using that mechanical approach to management, I can begin to look for other reasons to hold longer or get out sooner, and it helps me develop a management plan. And then finally, and I think this is the most important picture, is I take a no trade picture. When I identify that my advantages have gone away, when I identify that I no longer have momentum, a clear path, or an entry area, I like to take a picture and remind myself that my job is to follow rules. And when the rules aren't met, it's better to take a picture and say I'm not taking a trade than it is to hope or to want or to pray that everything works out the way you want. And yeah, Safia, they absolutely railed down from that point. So there just wasn't an opportunity. And sometimes, guys, there isn't. Sometimes there's just not a trade to be had. Great pictures. And then Alex, you got one for us here. Alex, there's that 50-50 with no divergence, right? Guys, we talked about it. 50-50 trade. Smalls below the large are wide. They're angled in the direction of the trend. Alex came to his 5-1 and said that there is no divergence. Because there's no divergence, he's entering at the area. Quick profits at the trouble spot and exit with divergence. Alex, you could not have executed this any better. I'm going to steal your picture, Alex. I hope that's okay. And I'm going to put it into my spreadsheet. Guys, when you see something that does everything you want to do on a daily basis, steal it. Alex's perfect 50-50 trade. Man, I want to be able to do what you do, Alex. That was absolutely picture perfect. And I think that the most important thing, and guys, great entries create manageable trades. I'm going to put that on a coffee mug for you guys. Great entries create manageable trades. This is why you focus on your entries for 30 days. Whoops. All right, Bobby T. Good top, right? Smalls are barely through. I mean, barely through. So we're a good top. You're into the mid band. Your smalls have cleared support, and you're looking for that quick little pullback to the 1-to-1s inside. 50-50 trade with divergence, strong market flows, small triggers outside. You're willing to take it. It missed you. Should or shouldn't I go get in? That's the question. Bobby, I'm a big fan. Don't chase. I'm a huge fan. Don't chase. Chasing is where we run into problems, right? But Bobby T, do you see how you had your momentum trade right here if you were going to take it? No divergence, snap back to those 1-to-1s, and then that's what got going. That one would fit a momentum style rule. Odds favorable, great termination, odds favorable. Pull back to the 1-to-1s and then continue the move down. You ever study that one, Bobby? It's a pretty solid look. And then they just had every intention of dropping. And there wasn't an opportunity for anyone to really get in. Happens sometimes, doesn't it? Sometimes it isn't your money. Sometimes it's everybody else's money. Jay Solar. Nice to see you in the room, Jay. It wasn't inside the triggers. And those, so Bobby, those momentum trades very rarely will be. It's not a trend trade. It's a momentum trade. Yeah, don't even worry about it. Don't add it in. Keep making money on that high probability. Maybe that one shows up later in life. All right, Jay Solar, you have a strong top. And all rules are met on your 21-3. Jay, what are your rules for a 21-3? For the termination? 13-2 has a strong trend, only facing more Fibonacci lines to cross. 5-1 displays a nice trend. Entry spot where the rectangle is. Not again. Man, they keep dumping me. I apologize for that, guys. Coming back to you right now. I think Discord has a case of the Mondays, right? Here we go. The 5-1 chart displays a nice trend and an entry spot where the rectangle is. However, there is a termination condition that needs to be crossed on the 13-2. Is it safe to enter at a rectangle? So Jay Solar, what you're asking me, really, again? Guys, I'm going to open up the education room, and I'm going to close the other Discord. Maybe it's creating challenges like that. I apologize. All right, third time's a charm, right? All right, Jay Solar, I don't know if you're with me. And this is such a common question, guys, and it never bugs me when it happens. But the question being asked is it safe to break my rules? Right, Jay, you're saying, is it safe to break the rules? Is it safe to take an entry inside of favorable large triggers even though rule number 2 hasn't been met? I can't tell you yes. Jay Solar, you'll have to make a decision based on study and repetition. I'm probably the last guy that's going to tell you to break your rules because I believe wholeheartedly in the advantages that rules provide. And it comes with this realization that sometimes there just isn't a way to get into a trade. Jay Solar, I can tell you that there are instances where if no divergence is printed, if the triggers are super strong, if you're coming from a termination condition on every chart, there are people in the world that'll say, you know what, I'll take a shot at it. And you did a great job recognizing where that market is likely to continue. And there are people that are willing to take a shot at it because of the great termination condition, because of that type of momentum, and because your termination conditions are consistent across the board. So while I'm probably not going to say it's okay to break your rules, what I am saying is you may create a set of conditions that allow you to bend your rules when the advantages are so stacked in favor of a trade. Does that make sense? But for me, if I won't take a 50-50 with divergence, I'm probably not going to trade into a termination condition with divergence. So hopefully that was helpful without being too cryptic, because ultimately I can't tell you what to do. Yeah, it did. It did, but it also went down right from news, didn't it? I think. Yeah, it happens. Jay Solar. And what happens for me and what I found is the second I decide I'm going to start breaking my rules, no, you're okay. That was kind of funny. As soon as I decide, because breaking my rules would have resulted in a win, it's like the cameras behind me and Murphy's Law in place. I'm like, man, that won last time. I'm going to try it this time. And I end up getting my tail handed to me. Great questions, though. I find, and you guys may get different results, but I love the stress of not having to decide when it's time to break my rules. Rather, I just prefer following my rules. So D, look at this, guys. Termination condition creates a full reversal. Full reversal creates odds favorable. It hasn't cleared the divergence high, therefore it is 50-50. No divergence. Pull back to the area. And then you're out at the first trouble spot. D, nice job, nice execution. On no divergence, everybody's got a different rule. I love the areas. I'm a big fan of getting in at the areas. It gives me less risk after the reversal bar and more room to the trouble spot, but I think you did a great job on this one. Gary, same trade, out at the trouble spot, probably went break even, taking money off at that next trouble spot. Gary, beautiful execution. And then Jose, they owed you this one on the last one, didn't they? Beautiful trade, Jose. And then Alex taking the same one. And guys, this is one of my favorite things to do, and I'm going to do it. Are you ready? So D, haven't put you on here in a while. What a great entry. What a rules-based trade. D's perfect 50-50, right? I dig it. that was D's perfect 50-50. This is Gary's. Debbie, great question. It depends on the trade, right? So let's talk about two scenarios. And let's see if we can find an opportunity. Well, we won't even talk about it. So Debbie, let's talk about if-thens. And I think that this is the part where you really begin to build a management strategy. I'm going to bring Microsoft Word up, and we're just going to do a little typing real quick. I hope that's okay. So if it's a high probability trend trade, right? I'm inclined to let my strategy play out because I have all three advantages in place, and it's a statistical probability that things will go well. And that's really fast and really horrible spelling, and I apologize. So that's my high probability trend trade, right, Debbie? I have every advantage on every trade. So what happens on a 50-50, and let's use this for example because it says we have to manage assertively, right? It becomes an idea of if-then. So Debbie, if a divergence prints, then I exit. If my rule is to not take the trade. So that's one of the things that will happen with a 50-50. If no divergence prints, I'll take profits at the first area and go break even. If divergence prints after first profit and it's still a 50-50, I'll exit. So do you see how this works? Everything is if then. And right here I'll say if I get 3 divergence and weak triggers, I'll exit early because the advantage has gone away. And guys, this is a part that so many people don't do. So many people don't say, well, now that I've gotten in, this is what it's going to take to get me out. So Debbie, this is a very remedial approach. If I'm on a 50-50, I'm never letting my strategy play out because I don't have those advantages in place. I have to manage assertively. If I have a high probability trend trade, if that checklist has been met and everything is exactly where it needs to be, I very much take a come and get me approach to it. They're going to have to take me out of this market. I'm not going to leave willfully because I have the advantage of momentum, because I have the advantage of a clear path, because I got that great entry area. And the reality is, I would rather lose a perfect trade than exit it early and watch it run without me. Does that make sense? And then Debbie, that management without having a clear plan, guys, look on the 5-1, how much reaction there is at areas. What's happening in one bar, and let's do this because I think that this is a pretty good example for a lot of people. I'm going to take this one bar on my 13-2, and it's all of these bars on the 5-1. Guys, there's a lot of opportunity for you to get nervous based on tick fluctuation. And this is where having a plan becomes so imperative. Understanding that you may be in the perfect trade, and I'm not saying that this was the perfect trade, but if you're in that perfect trade, there's going to be fluctuations. And the more identifiable your management plan is, the easier to follow, the more clarity that you have in your management plan, the easier it becomes to manage. And I tell you, Every perfect entry, guys, every picture that you take of a perfect entry has a great opportunity for management. So Debbie, odds favorable, no termination conditions, perfect entry. These guys are going to have to take me out. I'm not going to willingly exit the market because of a little fluctuation against me. And then the flip side of that is we'll take that 50-50 picture. I begin that if-then. If a divergence prints, right? Then I exit. Because look what happens here. You get a fluctuation. And if you're panic-stricken, you're going to exit only to miss out on it going to the next area. So you have to play that if-then scenario every time. I hope that's helpful for you guys. Finding entries is easy. All of you guys are going to be able to find entries in the first week. It's what you do with those entries. And it's that if-then scenario. Here's the perfect 50-50 in management, right? 50-50 trade, giving away the advantage of momentum. Not even giving away the advantage. It's just a medium probability trade. Perfect entry, exit at the trouble spot, no risk on the trade. You do better, then there's your plan, right? Let it play out, especially if you're on simulator. Because there's so many opportunities to learn every time you pull the trigger. There's so many opportunities to learn and get better at what you're doing. Absolutely, Jay Solar. Great question. You know I have a picture for that, right? And Debbie, post pictures. Let's talk about it. Let me help if I can. I love helping. So Jay Solar, different areas. And this is all on your 13.2 chart, right? And we're respecting these areas on the 13.2 as potential termination conditions. If it extends all the way to the right side of the screen beyond the gray, J Solar, it's your native fib. It's that 13.2 fib. Skinny little fibs that don't go all the way to the right. This is your 5-1 chart. And then the fat fibs that don't go all the way to the right, those are your 21-3 fibs. So if we look at the chart right here, I have a 5-1 area of support that didn't break, termination condition, right? I have a 13-2 area. I have a 21 and a 5-1 area. And then up here, I've got that 13-2 native. See how it extends all the way over? But for the sake of my trading, price reaches an area. I'm not trading into it. And what I find is some people will say, well, it's only a 5-1. I'm going to take that trade. All right, you can. That can be your choice. But these areas were put on the 13.2 for a reason, and I tend to respect them wholeheartedly. Guys, what are we seeing on crude? Resistance to support, not quite resistance. Absolutely, Folger. So what is a fib? Think about it this way, and let me show you. Ah, man, guys, I love these questions. So when you open your software, and I think that this is pretty cool. If you guys have never really seen this process, it's neat, right? When you open your software, guys, your software is taking every pivot, and I mean every pivot on every time frame. And it's creating higher time frames and taking those pivots and Fibonacci projections. It's creating synthetic, it's projecting forward, it's going back historically, and it's weighing out all of these areas. And this is what it looks like. Do you guys remember Yar's Revenge? Guys, this is an absolute mess. So Folger, which lines are most important is what the software is working out, and which prices have the highest concentration. This gets you your first run of fibs, right? The highest concentration, the most important. And then from that, when they show up in the same area again, holy smokes, absolutely. That confluence of charts. Guys, you're looking at a range-bound market right now. There's a huge fight between buyers and sellers. 50-50s are lower probability in a consolidation. Wait for everything to agree, right? Wait for that clear path. It's okay. Termination created a full reversal. Guys, there was your 50-50. Allow it to be perfect. It's okay. Right now, there's no divergence potential. Just saying. All right, let's look at some more pictures. Guys, great questions. And please, 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 no matter what we're talking about, ask a question. It's okay. I will digress all the time. I've got the attention span of a squirrel. Zeba, good morning. Zeba, odds favorable? No. It's not a 50-50, but it is divergence, divergence, weak triggers, no areas inside. Where was it 50-50? Where was it half through, half not? That's okay. Even on the 21-3, there's no Fibonacci areas. But Zeba, what you run into here, and I'm going to show you, and guys, I never tell you how to trade. But what I will do is I'll say you have forfeited momentum. Do you see that? Small's inside of the large, not your best look. And then you've had multiple divergences straight from a fib, not your best look. You don't have an area inside of favorable large triggers. Once again, rule number 3 is not met. Rule number 1's not met. And when this third divergence printed, rule number 2 wasn't met. A lot of challenges coming into this one, Zeba, and I'm glad that it worked out for you. But by the time you exited that trade, you had given up every advantage. It was inside, but not a full bar. The area inside a favorable large trigger, Zeba? Here's your large triggers. All the way down here. Here's your entry way outside of them. Are you sure about that? And maybe it's a misunderstanding of terms, but there are 0 areas inside of favorable large triggers. You are on the wrong side with weak triggers, multiple divergences, and weak triggers. Does that make sense? Cool. Sometimes you guys, no, it wasn't. Zeba, these are your triggers, right? Are you comfortable with that? That's your entry. See how they're so far apart? This can't be inside of that. Over here, you had an area inside. Over here, you're hoping that that cute little pink line holds without momentum and against all these divergences and weak triggers. Does that make sense? What's your but? And that's okay. Let's go through it. Because I love the thought process, guys. I love to hear what you're thinking. You saw it inside, otherwise you would not take the trade, and now it's outside. Zeba, is it possible, and I don't know, I'm not there with you, is it possible that you wanted it to be inside so that you could take the trade? But let's scroll back. That midband hasn't been inside a favorable large trigger since 41.42. 5 points above, 6 points above, all the way up here. That's the last time it was inside the triggers. It has been above it for the whole time down. And it's okay. Sometimes you just want to be in a trade and you break your rules in the moment. Totally cool. But if you go back and look at it, this is where it's important to go, my brain said it was there, but it really wasn't. And this one didn't fit my rules, and I got away with one here, right? And I'm glad that you got away with it. I know, it's okay. Zeba, and this is for everybody. Zeba, you're going to break rules because you're human. Because sometimes you'll get focused on one thing and you'll forget to focus on something else. Guys, that's a normal part of trading. I haven't met anybody that doesn't make mistakes from time to time. It's okay. I don't hold it against you guys. If you break a rule, I just like to have the conversation because my goal is to make sure that you understand so that you can feel good about it, right? So that you can go, all right, now I see it. We're okay. Ziba, you are always good with me. 50-50, divergence prints. Beautiful. Rules not met, Gary. No trade taken. It was not, Ziba. So on your 21, when is a mid-band? When is a mid-band a termination condition? Do you remember that one? Let's go to termination conditions. So your large chart mid-band, whether it's a 21 or a 13.2, it is a termination condition if the trigger lines are a full bar away, Ziba. So it's that gap theory, right? The mid-band behaves as a termination condition. I don't even have it on that one. There we go. The mid-band behaves as a termination condition when those large triggers are a full bar away. Do you remember this rule, the gap rule? Gap theory? Yep. So if you look at your 21, those large triggers are smashing through it. So we're not worried about this as a potential termination condition. This thing is just railing to the downside from a termination. Not at all. There's the bottom of price. Yeah, so nope, this doesn't act as a termination at all. But this loss of momentum and these 3 losses of momentum suggest that it may bounce up higher. So, nice job. And then Gary, following rules, 50-50 with divergence. He's waiting for a market flow signal, never got it. Gary, great. John in Alaska, odds favorable, although it is waning. Man, that's not, well, I guess it's waning a little bit. 50-50. John in Alaska, first of all, thanks for posting, man. I think this is the first one I've seen from you. It's a 50-50 trade with 1 divergence. You take it from the perfect spot, from that area likely to hold, right? This one has the potential to break, but 23 is broken, the larger below. And you take it right there from 23, overlapping with 1-to-1s, right at a mid-band. Everything lines up, and you're able to get paid. Nice trade, John in Alaska. How is Alaska right now? Is the weather beautiful there? I keep threatening to visit. 60? Nice. Sounds perfect. Thanks for posting. Please feel free to post all you want. Anything I can help with. All right, David S., let's see what you got, my friend. There's that odds favorable, right? That's the same one Jose took. No terminations in market went opposite. Held the trade too long because you thought market will go to mid-band, then up. Market extended more than anticipated. David, there's just no reason. And I know one of my most dangerous words is I thought. I thought it was going to do it. I love to remember. I love to go into every trade realizing that I don't control anything, David. And this is an opportunity that I think a lot of people don't take advantage of in the beginning because we really do trade hope rather than rules. And I love the mechanical approach because the mechanical approach says that your stop's right here below the reversal bar, right? David, you get out of this one losing 6 ticks rather than 60. 120 rather than 600. Remember that your job is to make money, right? The goal is to make money. The goal is to have that statistical advantage, and if the market moves beyond that window of opportunity, and guys, this is hard for so many people. I'm going to go to the entry rules. If that market moves beyond the window of opportunity, I don't want it anymore. I'll wait for the next best opportunity, David. Something to think about. Yeah, it's up to you. Guys, your trades are your trades. When you present your trades, I'll talk about opportunities that I see to maybe save you some money in stops, to maybe grab you extra cash when there's opportunities there. And I think they're about to boot me. There we go. I froze up for a second. Here we go. Folger. You wait for everything to break. So you have a clear path, but not odds favorable momentum. And not an area inside of favorable large triggers, but you're anticipating resistance to hold because of the location of the triggers. Fair assessment? Odds favorable? No. Clear path? Absolutely. No worries. If you thought you had odds favorable momentum, let's go back to it, right? That's right. The smaller inside. That's where it becomes a bit of a crapshoot, right? That's where you forfeit the advantage of momentum. Doesn't mean that it won't keep going. So let's talk about what you did have. You had a clear path in a very strong downtrend, and you had an area of resistance on your 13.2. So if we just talk about termination conditions, right? Price reaches resistance. All of the trigger lines remain below it. This is an area with the potential to stop the market. So you took a shot with everything down. But notice that you don't have momentum on the 5-1. You don't have areas inside of favorable large triggers. So at this point, you're just trading areas and hoping for the best. I hope it worked out. It's not my trade. I don't disagree with the reasoning, though. And then there's that same look, right? And this is Z, I think. Z, good to see you in class. 13.2. Well, you got that fib, you got that recalculation mid-trade, right? I've seen it. But this is that same idea. Clear path pulling back to resistance. Clear path pulling back to resistance. There's that mid-band. Parabolic perfect setup. What does that mean? That means, Folger, the same thing we talked about. We're in a strong trending market, right? Everything says down. And Z says when everything's going down, he's just going to keep selling a mid-band until it stops working. Great trade, Z. And then Joel. Joel, not quite odds favorable, right? And this becomes kind of a tough look. See how flat and lifeless those large are? And this is a great lesson, Joel. When they are flat, and when they have been flat like that, you're looking at a 50-50, right? Smalls above, large below. But the large aren't wide. They're not angled in the direction of the trend. Yeah, they're lifeless. And you can really see it on your 5-1, just how lifeless they are. And this just becomes a low probability scenario. And this is probably just boredom because you've been so patient all morning. That's all right, though. Guys, it's okay to lose trades. I think it's important that you understand that. It's okay to take a loser. Guys, that's part of being a trader. And losses are a normal part of an equity curve. But here's my favorite right here, guys. When you stop expecting to win every trade, it's one thing saying that you're okay to have a loser. It's another thing to say, I'm not expecting to win the trade. I know that I'm not in control, but I know that I have a statistical advantage. So when you stop expecting to win every trade, what you find is that you start winning more of your trades because you don't let your emotions take over so much. You don't care about the result. You care about the execution of the method because you know through study that the execution of the method provides a statistical advantage, guys. And that's where the classroom comes in, making sure that you did, in fact, have that statistical advantage as you were coming through. And then Bobby T, there's another one of those momentum styles, right? No divergence, that'll snap back to the area as everything clears. We talked about that one earlier. So there's crude. It broke out, right? Weak triggers at support. Weak triggers and divergence at support. No reason to try and sell that midband because target reached. Well, Bobby, don't change anything, right? Don't change anything. But you're going to see them. After a good top or bottom, you're going to see that little momentum style. That's almost one right there. It breaks, snaps back, and goes. So guys, what do we see now? Termination condition. I've got smalls above the large. The large have broken through the area now. Because they're not a full bar away, the midband is not acting as a termination condition. I can identify the top of my window of opportunity, the highest point of support to the lowest point of support. What do we think, guys? This is what we call a pre-trade picture. The one challenge is this is not what we call a strong bottom because the trigger lines broke through. Could be overrun, but we do have odds favorable. Not a good top or bottom. We do have odds favorable. We have no terminations, and we do have an area inside of favorable large triggers. Does this fit your rules for a trade? Fits mine. Don't call trades. All I do is I talk about whether or not the advantage is present. And then for those of you working on management, this is S&P. For those of you working on management, where's the point where the market shouldn't go? Below the large triggers, right? So if there were a 41.32 entry, you're looking at about 3 ticks, right? This 5-1 divergence from over here, unless divergence prints, Mary, it just made its way back. This is one divergence on a 5-1. The only reason it continued to print is because the trigger lines haven't broken it yet. If another divergence prints, that's going to take some fuel out of it, right? Because now it is a pivot stop out. But the idea is most pivot stop outs typically take out the previous pivot. So if this one takes out the previous pivot, hopefully it pushes me down to my best entry. Does that make sense? Remember, we're using the 13.2 for those termination conditions. It's not a 50-50 trade, so really divergence doesn't come into play, Mary. And I have strong triggers, and I have favorable large triggers. And guys, that's an important part of your plan, right? Recognizing, is it medium probability or is it high probability? And if it's high probability, well, do you have a rule about divergences for high probability? I don't. And we'll see what happens. It may or may not. All I care about is whether or not I have a statistical advantage. Anything happening on crude right now? Did they slow down? It was a quick morning, right? Anything can happen. 1 divergence, 2 divergence. D, the bottom keeps it from being high probability. Let's go back and take a look. I think that's a great question. Especially since, look what the market's done for the last 7 hours. But we got to Fibonacci support, right? It's not what we call a strong bottom because the trigger lines broke through. Does that make sense, D? So this is kind of an overrun, and this was one of the lessons my brother gave me, because this used to drive me nuts. I'm like, but all the triggers went through, right? It broke. And then what he said is, yeah, sometimes they overrun. Whoops, wrong one. Sometimes they overrun, and that's just a part of it. They're areas. He goes, but this is where it unbroke, and this is where all of your trigger lines are above it, and this is where all of your trigger lines are above this area of resistance, now acting as support. And the only thing that I'm looking at now is odds favorable and no termination conditions. Does that make sense, D? Sometimes they overrun, especially when the market's been railing down or up. So it's not the best of the best, right? Early in the movement, looks like gap theory. Over here, when it hits resistance, it would be, without a doubt, wouldn't it? When the mid-band and resistance get hit, those large triggers didn't really follow. Becomes a little sketchy in there. But now we've got everything. If we're using a checklist, have you guys printed this out? Do you guys look at this pre-trade and start talking through it? Doesn't it remove any doubt? Does it remove the stress? If you know the 13.2 is where momentum comes from, if you know the 13.2 is where terminations come from, did you need to throw this pink line into the equation, right? Maybe this is the spot that pushes us back to our best entry. Does that make sense, Mary? If you remember where everything comes from, strong triggers, no termination conditions. These are 13.2 rules. 5.1 is just an entry chart. And the only termination condition that I respect on the 5.1 is 3 divergences in the same location. Otherwise, this goes back to when Debbie was saying, do you just let it play out? Man, this is where I'm just praying for a pullback. For the love of fuzzy, give me a pullback. My rules are met 100%. But what happens if I hit resistance and none of my trigger lines break through? Well, then I forfeit the advantage of a clear path. Does that make sense to everybody? If my rules are met, I'm obligated to pull the trigger. If my termination condition is reached, well, now I go back into that process. It either holds or it breaks. If my small triggers get above the area of resistance, well, then I'm in one of those 50-50 scenarios. If the small triggers never break through, well, then it's a termination condition, and I'm not looking for that entry because I no longer have the advantage of a clear path. Life can be so simple. Great question, Miel. Let's go through it. You know I have pictures for it, right? So this picture is called, Is It Broken? Price reaches an area, no triggers break through. So Miel, termination condition, right? Easy to recognize. All the trigger lines are below resistance. Resistance has the potential to break when the smalls break through with odds favorable momentum. But the path isn't clear, Miel, until both the small and the large get to the other side of that area of that termination condition. So on that same idea, let's do this. Price reaches resistance, absolutely no trigger lines broke, therefore no trades into it. Smalls are through the area, but the large are not. There's your 50-50, Miel. It has the potential to break, but it hasn't broken yet. And then when the large get above the area as well, that path is clear. Does that make sense? Awesome. And then reach that termination condition. Gary's saying, I'm going to wait for it to break. And it hasn't broken yet, has it? Smalls haven't made it through. Crude oil's grinding up. There's a lot of hurry up and wait in the market, isn't there? 90% of what you guys are going to do is just reading indicators. 10% it's going to be trading when the advantages are present. So I want to do this because we're in a holding point, right? No rules met. Whoops, that's the checklist. That's not the one that I wanted. Okay, example plan. Guys, we talk about this every day in class, an example plan. Recognizing entries, right? High probability trend trade. Is everybody comfortable with this? 20 days, read your indicators, focus on the best of the best, right? Clearly defining your management plan. So guys, what happens when you add a 50-50? If you add a 50-50 to your plan, guys, you have to create a new plan. And you have to create entry conditions, right? So your checklist for the high probability trend trade, guys, comes down and becomes a factor for your 50-50 trade. And then what makes it a 50-50? It's those (50-50) on the 13-2. Guys, so you're creating a new set of rules where you have to say no divergence on the 5-1, take it the area, with divergence, not my trade. So guys, what you're doing is you're writing another plan on the 50-50 trade, and then you have to create a management plan to go with this 50-50 trade, because this 50-50 trade is not a high probability trade. Does that make sense? Guys, this is the second half when you start getting into 50-50s. Understanding that there has to be a plan in place, guys. Smalls haven't broken the area. Large haven't broken the area. Who's saying to themselves, man, I'm going long even though it's a termination condition because dagnabbit, I haven't been paid today. Rules met or rules not met. It takes all the stress out of it, guys. And then once you get into a trade, let it be if then. I'm going to take a few minutes. When I come back, you guys run class. You guys let me know what to talk about. Post your pictures, ask your questions. And guys, I'm going through my lineup here. If you're brand new, give me a question. If you're on a demo, tell me what you need to see to get you off that demo. If you're curious about how to study, if you need help with a picture, if you need help putting it into the spreadsheet, guys, you tell me what to do today. And then I'll be back in just a few minutes. get into the last hour. Jose, not a 50-50, but it seems to be working like one, right? So let's go through. And Jay Solar, if you're with me, and guys, this talks about management as well. Let's do this. If then. Does everybody agree that we have strong triggers? What about no terms? Not true. What does that mean? That means that we don't have the advantage of a clear path. Guys, Jay Solar, this is a similar look where you were asking earlier, is it safe to take this trade? Well, that's up to you. But this is one of those scenarios. Right, guys, here's your management lesson for the day. Medium, and I would call this low probability because of the termination. Trades must be managed assertively, right? So this is where your if-then comes in. Your first condition may be if divergence prints, I'll exit. If price reaches fib, I'll take a portion, get to 0. Does that make sense, everybody? I'm not encouraging anybody to take trades into termination conditions, but what I am saying is that if you're going to break the rules anyway, you better have a plan. If you're going to give away the advantage of a clear path because you hope it continues up, well, then you better have a plan, right? If you were in right here, your stop is going to be down here. So you've got the if-then. If divergence prints, I exit the trade. It hasn't happened yet, has it? It's fluctuated, but it hasn't happened yet. If price reaches my trouble spot, well, then maybe I'll take a portion off at the trouble spot and exit. But do you see how price fluctuation can absolutely ruin your day if you don't have a plan? And now we're back into it. If divergence prints, I can take this stop and go 2 ticks below my reversal bar marker, because if divergence prints, that's where it's true. And if you were taking that $100 scenario, guys, you've already been paid on this trade. You gave away an advantage, therefore you must... Oops. Can you guys see my screen? You can. You gave away an advantage, therefore you knew that you had to manage assertively. There's your trouble spot. At this point, any sort of risk would just be silly, right? So Jose, it seemed to be working like one. What are the conditions? Had a reversal of the market. You had Zod favorable. Small's outside of the large. Tiny window of opportunity. Only you can decide whether or not that's a trade that you're willing to take. But it's imperative that if you're taking medium probability trades, guys, that you've at least thought about what it's going to take to get you out or what it's going to take to get you in. And the reality is that if you don't have a clear plan, you probably jump ship right there only to watch it go exactly where you thought it was going to go. Does that make sense, everybody? And now we're still into the termination condition, right? And look at the reaction. So Jay Solar, when we talked about it, if that odd's favorable, if no divergence, if odds favorable, if a tiny window of opportunity, do you see how maybe you can make the case for breaking your rules? I won't do it personally, but there's some of you that just can't sit on your hands. So if you're gonna willfully decide to break your rules, you've got to have stipulations there. You have to determine when you're willing to do it, when you're not. You have to accept that it's not a home run trade, because the reality is, whoops, that termination stopped it, that termination stopped it, this termination stopped it, that termination stopped it, that termination stopped it, this termination stopped it. Yeah, this termination stopped it. So guys, how egotistical are we to believe that even though I scrolled back for 3 days and saw 20 examples of termination conditions stopping the market cold, that because I want to be in the trade, this is the one time that it's going to break? Does that make sense? It might work. It had advantages. But I'm looking for long-term statistical advantages, right? And that's just me. But understanding your limitations through chart reading, Jay Solar, understanding that it's a termination condition, that it may create a bounce, but because of all the momentum, it may retest the area. That's a pattern that you're going to see a lot. Some of you are willing to take advantage of it. Some of you prefer not to. Some of you will say, I'll just wait for it to break. I don't think any of you are wrong. Just make sure that you know what you're getting into so that you can manage it accordingly. That's it. That's all I'm saying. What do you guys want to talk about? Yeah, Jay Solar, we all do, don't we? Especially when we haven't had a trade in a while. You're like, man, it's been 20 whole minutes since I've had a trade. What am I going to do? Crude has a machete fight in an elevator. Pretty much, huh? No clear advantages. Not so much. Think about that concept, guys. 90% of what you do is going to be reading indicators. If you sat in front of your monitor for 10 hours, maybe an hour of it would be spent trading. And I think that the quicker you come to terms with that, the easier it becomes to be patient. What are you waiting for? Guys, you're waiting for something that has been proven to win more than it loses, right? Doesn't it make sense to wait for something that's been proven to win more than it loses? Doesn't it make sense? The people that struggle a lot are the people that insist on being busy. Guys, day trading is a lonely, boring sport. Get a book, get an audio book, draw a picture, play a video game, listen to music, whatever you need to do. And just wait for those advantages. Or guys, if you're one of those people that can't wait for advantages, get up and walk away. Because what's the goal? $250 to about $400 per contract, right? We saw this morning, Alex made 160 of his right here on the 50-50 trade. And I believe we had from the day as well, from 65 to 85. There's another 200. What other pictures did you guys show me today? D, you made 80 of it right there. Guys, waiting for those advantages, waiting for the best of the best. And a lot of you guys took this one all the way up to the fib. A lot of you guys turned this into a $300 trade. Hitting your goals isn't difficult. And it's not a matter of the winners that you take. It's a matter of the losers that you avoid, right? When you give away those advantages, this may break. You never know. Have you noticed that nothing has changed still? If your rules say, I'll take a portion off at trouble, you're out at $39.75. But nothing else has changed. Can you watch that little 5-1 bar come against you all the way to these small triggers and not make an irrational decision? Because if you have an if-then scenario, guys, it's never happened. This is the only part of your if-then that's worked. Does that make sense? Some of you took this trade. Some of you jumped ship on this 5-1 fluctuation. Some of you jumped ship on this 5-1 fluctuation. It's still a termination condition, but you haven't had a divergence yet. All right, guys, 60 of you in here. What do you want to talk about? David S., you got something you want to talk about? Come on, Ricky, Rocio, Gary, Geo, Tricky Marshall, Stu, X-Romance. Anybody? I can go through the whole list. That seems silly. There's got to be someone in here that isn't so stinking good at this that they have a question. Bobby T, I'm running 10 days on everything but market flow. On market flow, I am running 5. Has anyone ever studied the psychology of trading? Great question, David. And there you go, Jay Solar. You took the momentum up to the area, and then you take the best entry, and you managed out. Nice job. Great execution, right? And then you just have to have that management plan in place. Nice job, Jay Solar. David, best way to study. You know my honest opinion? In the beginning, go to your 13.2 and just get in the habit of circling tails. I think this is one of the best ways. Go back and circle tails and see if they fit the rules. That's a great way to study. Repetition is key. Go through and look at these. You have to know what the rules are, right? In order to follow the rules, you have to know what the rules are. So make sure that you understand the rules, and everything is lined out for you guys. Let me pull up Discord. I know it seems crazy, but my goodness, we have literally tried to come up with everything for y'all. So David, here's a great way. Start with the 101 basics. Most of you guys are already beyond this. What's a Renko bar, right? How's the software work? What am I looking at? Go into your trigger reading, understanding when you have momentum, when you don't have momentum, right? And then go to the self-training, because the self-training starts at the beginning. It starts talking about odds favorable momentum. It starts talking about those rules being met. I'm a huge fan, David. Take a foundational approach, right? Don't try to be a genius yesterday. So make sure you're comfortable with momentum. And David, I've watched your charts. You don't have any problem with momentum, right? Pretty comfortable to say. And then if I had to guess based on what you've shown me, you're pretty good with termination conditions, right? You know how to identify one. You know that when price reaches, cool. So where's your weak point, David? Your entries have looked great to me too. You seem to be taking the entry at the area inside of favorable large triggers. Are you comfortable with that one too? It seems like you are, yeah. So David, you're beyond the basics, right? Do you know what your job is right now? Your job is to simulate every day and show me everything you do. Don't hide stuff from me. Don't hide losers. Which chart to look? Awesome. So let's do this. Telling you guys, I've got pictures for everything. That's not the picture. $13.2 leads the way, David. $13.2 determines the overall trend. Your job is to trade with the trend. $13.2 gives you momentum. $13.2 gives you no termination conditions. 5.1 is nothing more than an entry. Yeah, but you've got it. We've just learned it, right? Now you just need to follow it. So, guys, when you come through, and this is for everybody, if these are the trades that I took today, let's say this is my today trading, and I take 1, 2, 3, 4, 5, 6 trades. My job tomorrow morning is to look at these 6 trades to see what kind of trades I took, to determine whether or not I broke rules. My job is to take yesterday to make me better today, right? So are you guys doing this? Let's talk about a real study path. Who's going back and reviewing their trades every morning before they start trading again? Anybody? Most people don't, because it feels like work. We all anticipate that if we just simulate the market tomorrow, we're suddenly going to wake up better than we were today. And it's interesting that that's the psychology, right? And Alex, that may be a reason why you show me so many stinking winners. Guys, if I look at yesterday's and I trade in determination conditions 3 times, and I lose 3 times in determination conditions, and I start my trading tomorrow with that realization in my head that I lose a lot of money trading in determination conditions, so my focus for the day is going to be not. Guys, this is how you get to where you want to be. Tuesday, you're going to take trades, and your goal is to try and be a little better than you were on Monday, right? To fix a mistake, to get in, whether it's entries, whether it's recognizing termination conditions. Guys, you have to go back and study until these things become easy, right? And every day you do yesterday's market replay. Guys, you've got to. And if you haven't really started that process, if entries are your thing, I don't know how to make recognizing entries any easier for you. This is 190 pictures. But do you know what the truth is? There's 59 of you in this room. I would bet dollars to donuts that 50 of you have never clicked on every one of these to look at it. That 50 of you haven't looked at management things, that haven't looked at chart reading things, haven't looked at termination condition, and that's okay. Guys, this is your money, not my money. Your trading doesn't affect me one bit. But I'm telling you, if you really want to be a trader, if you really want to do things the way you told us you wanted to do things, I'm giving you the keys to the kingdom. Take pictures and post them in class. Go back and study your pictures. Do market replay. Get better, get better, get better. You have a time issue. You do 3 major things every day and you can't put any extra time for going back and reviewing. Not at all, Ziba. I believe you. So here's the deal. If you can't make time, well, then understand that your path may take a little bit longer, and that's okay. That's not a big deal. Yet I know that you're a very busy woman. I totally get that. But what if, Ziba, you said my trading times are from 8:30 till 12:30 every day, right? That's okay. Is that, what times do you set apart for the market? 8:30 to 12:30, give or take? That's typically when you're in here. I know that's when you have that little break, right? Ziba, you know I'm a solutions person, right? So what if instead of 8 to 11, you said to yourself, part of my trading day, part of the time that I allot, is that first 15 minutes to look at what I did yesterday? No matter what happens in the market, because the S&P doesn't open till 8:30 anyway, what if you gave yourself that time so that you could do it? What if you found and you cut out? Do you think that the advantages of review would outweigh the loss of time in that 15 minutes? Yeah. Or what if there's just nothing setting up? I don't have any rules, Matt. I'm going to sit on my hands. I'm going to go look at some pictures. Just going to study a little bit. So throwing that out there. And guys, I get it. We're all busy. We are all busy. But we all also want to be day traders. So I'm trying to help with that path just a little bit to get you there a little bit more. So David, remember, keep it on 2 charts, right? And then when you talk about it, and guys, does anyone else writing down, does it help you? If I write something down, guys, I spent college where I would take notes. And if I took notes, I didn't have to go study it. You want to be only a trader eventually? Then Ziba, it's going to require you, ultimately, making sure that you give yourself every advantage, right? Nobody ever went to medical school and said, well, I'm not going to learn about the gallbladder today because I'm really busy outside of medical school. So, and it's okay if your life is pretty overwhelming right now. There's time, right? You're young. There's time, and you're on a great path. So stay on that great path. A big herd of rescue animals? Oh, that's awesome. That's okay. Hey, Zeba, there are 1,000,000 18-year-olds in the woodlands that would love to help you take care of those animals for 15 bucks an hour. And since you can make $300 every couple seconds on a high probability trend trade in a minute, might be worth it. Teach a kid a skill. Reach out to the local FFA at the Woodlands High. See if anyone needs extra credit. Yeah, I know you do. You're like my aunt. My aunt has 1,000,000 rescues. She has horses and turkeys and raccoons. You name it, she has it. Makes her happy. Cats and dogs. What do you think, guys? Your if-then never came to fruition, did it? Your if-then never panned out. You still have never been given a reason to exit this trade. Jay Solar, do you see how if-then gets you paid a lot more? That's your management side. I'm rambling at this point, guys. I'm about to go mic silence. Anything can happen, triggers. 3 divergences. Price is pushing down towards that mid band, and the large triggers are a full bar away. Whew. That's a quick read, wasn't it? What are we recognizing? A loss of momentum, coupled with 3 losses of momentum. Looks like things, they are changing a little bit. What do you guys want to talk about? Let me see. I'll start looking at pictures. I've got tons of pictures, right? This one's called Rules Not Met. I don't know what it is. Let's find out. Weak triggers, even though it looks perfect on the 5-1. So David S., here's a good one. Letting the 13-2 lead the way, right? Don't have that odds favorable. Even with the clear path, not looking for that trade keeps you out of trouble. Guys, I love these pictures, the rules not met pictures. Especially when those rules not met keep me out of trouble. Is everybody comfortable with the gap theory here? Should we see if it comes to fruition? We'll put a little circle. It may or may not. I don't know. But what I do know is that when the large triggers don't follow, I'm giving away a pretty significant advantage. Hey, Marshall. What kind of trade is this? We got weakening triggers, right? Don't have termination conditions. Don't have an area inside of favorable large triggers. Marshall, would it make sense to have an entry at an area inside of favorable large triggers? And guys, this is where the checklist gets you in trouble. Losing momentum, right? But you said yes. Area for entry, you still said yes even though you're not doing it. I like the read, everything's going up, right? But Marshall, if you don't have fibs here, here's the real question. It is in the large triggers. Just because there is an area, our entries come from the area. Does that make sense? You are 3.75 points above the area where we expect it to bounce. Yeah. So Marshall, without the termination conditions, though, why don't I see a long from you right here? That's what I want to see. Because you don't have those fibs. That was odds favorable and no terminations. And look at that perfect pullback. You just got in, no worries. But you see how that one, that's the one. And now here, your advantage goes up considerably by embracing areas. But it's weak triggers, and then you have a divergence. Marshall, I feel like you're missing information. No, you've got weak triggers inside. And see how it's pulling back, Marshall? Loss of momentum, loss of momentum. Use those areas. That's where Rule 3, guys. Rule 3 is designed to help you out. No. Marshall, in your picture, so let's do this. Are you ready? Ba-ba-boom, ba-ba-ba-boom. That's the sound it makes when I take pictures of your pictures. So this is your 5-1. Marshall, this is the top of your triggers all the way to the bottom of your triggers, right? Are you comfortable with that part of it? There's your triggers. Where's your highest point of support? The mid band. Where's your lowest point of support? The mid band. That's your whole window of opportunity per the rules. So it's not that you should have entered at the bottom of the window. There's only one line that creates the window. There is no fib. All right, so this is good. I like this. So now we're coming into... Yep, so, wow, that font's way too big. Let me drop this font down a little bit, and let's just do a little Rule 3. Man, that's huge. Hold on. Oh, it's because the picture's blown up so much. So, all right. So let's just go back to it. So rule number 3, Marshall, says that we are going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So those areas can be fibs, midbands, and one-to-ones. And then when you decide on that window of opportunity, Marshall, because it can be fibs, midbands, or one-to-ones, when you talk about that window, it's not the trigger lines themselves. It's from the highest point of support to the lowest point of support where that market is likely to continue. Does that make sense? So when you run into one of those cool situations like you had, where there's only one potential spot in that window because there's only one line inside of favorable large triggers, it definitely helps make that decision a little easier, doesn't it? But you are giving away the advantage of momentum. You're giving it away again here with divergence. So the high point is the midband and the lowest point will be the lower fib, but there is no lower fib. Are we talking about your picture, Marshall? This fib right here? Great question. Is this fib inside of favorable large triggers? Embrace the words. No. These one-to-ones inside of favorable large triggers? Not at all. So they're outside. They're not considered a part of it. And I love that question. So let's look at it. Reversal bar, area inside of favorable large triggers. We're ignoring the one-to-ones because they're outside of the large triggers, therefore not a part of the window. From the highest point of support to the lowest point of support, and once again, we're ignoring the support below because it's not inside the favorable large triggers. Does that make sense, Marshall? And I've got a lot of these. Whoops. Where'd my window of opportunity pictures go? And then on this one, once again, not inside the triggers, therefore not in the window. And I think that was a great question, Marshall, because this is one of those things that people struggle with every now and then. What's inside the window and what's not outside the window? Well, your window is defined by those large triggers and then the areas inside. And the reason that we do that is I like to use the throwing a ball up against a wall analogy. If this little retracement back to the areas, Marshall, is somebody throwing a tennis ball as hard as they possibly can. The areas provide a bounce point. This is like your brick wall from the highest point to the lowest point. And the idea is that with all of those advantages going up, with the momentum, with the clear path, with all that good stuff, this tiny little retracement in price isn't going to be able to break through that wall. It's very rare that the tennis ball smashes through the brick wall. So these provide a bounce point. And we don't know if it's going to be the mid-band or the fib or even the one-to-one, but we know that when they're inside of those favorable large triggers, it creates a very distinct advantage. Does that make sense? Cool. Great picture, great question. And then Z. Z, you decided to take it into the termination condition, right? Beautiful entries create management trades. You take an awful lot of money on it, and when everything continues to say up, you're holding for that larger move. Looking for that higher area, that fib. And you've got zero risk. Z, nice trading. It all starts with this one, right? Oh, you had a tight stop and it took you out break even. Where was your stop? There's your entries at 36. Oh, it caught you right here. That fluctuation got you, right? Yeah, just a little tight. No worries. I totally see why you did. And this is why we talk about those if-thens. If divergence prints, exit it, right? But getting caught up on these fluctuations on the 5-1, guys, will absolutely drive you nuts because That's not a lot of movement, but there can appear to be a lot of movement in this bar. Z, I think it was a good one. Yeah, and the 21-3, the 21 and the 13 range were helping. So you had odds favorable. You had, well, not odds favorable here. On the 8 range, not given quite as much help, but the 13 range, everything's up. So I like it. I think it's a great trade. But it's one of those reasons, guys, when you start moving stops too quick for no real reason, it creates a challenge. These little fluctuations are going to get you. It's like chumming the market. And usually we tighten up because we're not willing to lose, right? Not odds favorable momentum, not a clear path, divergence. Folger, you said you wouldn't be comfortable on this trade? Don't take it. That's the best, right? If you're not comfortable, don't take it. Because I bet if you found an awful lot of 50-50 trades with weak triggers, you'd probably find an awful lot of losers, wouldn't you? I feel comfortable saying that. Look at that. No, not okay. Do you agree? We gave away the advantage of momentum, also giving away the advantage of a clear path, giving away the advantage of momentum, right? And look what's happening at that key area, guys. Fluctuations. You already gave away once. What if we get a second one? Boom. Now we gave it away twice. How many advantages are you willing to give away and still take a trade? That's the difference. The most difficult part of being a day trader, guys, isn't recognizing statistical advantages. It's doing absolutely nothing when those advantages aren't present. Can't stress that enough. Doing absolutely nothing when there's nothing to do. So Folger, because you didn't want to give away so many advantages, right now it looks like it's working out for you, doesn't it? So what I would do is watch this. Take this picture, identify 2 losses of momentum, identify the loss of momentum, identify the 50-50, and say something clever like, too many advantages gone, right? Guys, what's pretty cool is sometimes you can take this picture and all you're doing, Folger, is you're saying, man, I did a great job reading my charts. I lost momentum. I didn't have a clear path. I lost momentum twice, even though I really wanted to be in a trade. My chart reading said don't. So who took the long without the advantage of momentum? Who took the long without the advantage of a clear path? And is sitting here going, son of a bitch, why did I do that? Pardon my French. You did it anyway, Marshall. And you got stopped out. And guys, it's okay. Take them. But post your picture. So Marshall, one thing you don't have is the advantage of running synthetics. Folger, because your rules weren't met, right? Those are your only options. And it doesn't mean that it's done. It may go up another 100 points. But it means that your entry at the area was not supported with enough advantages to pull the trigger. So now you'll just be a little bit patient, right? Your charts are acting up. Get with Jason, Marshall. I want to remind you guys, too, that you guys are Jason's job security. So if you're having a challenge, man, go get in line. Let him help you. He is absolutely brilliant. The only things Jason can't fix are the things that aren't broken. So what did we learn today? Well, we definitely learned that advantages help, right? And if you start giving up an advantage, don't let them compound. Don't trade hope, guys. Hope is an accessory that costs you a lot of money. Just be calm. Wait. From a bad top, mid-band's the first target. If you took the entry, divergence allowed you to manage out, didn't it? Didn't we see this earlier? A bad top, right back to the mid-band. Looking to finish the move. Bad top, back to the mid-band, finish the move. I love patterns, guys. Bad top, back to the mid-band, finish the move to resistance. Bad top, back to support, finishes the move to resistance. Strong bottom, that market cranks up. Bad bottom, straight back to resistance, large triggers don't follow, finishes down to the next key area. Does anyone ever just scroll back and look at patterns? Doesn't reach the area, gets to resistance, ultimately finishes the move. Goes past the area, pulls back to Fibonacci resistance, finish the move. There's consolidation. Bad top to the mid-band, 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 bad top to the mid-band. Good top, consolidation, pushes it down. Guys, there's a million things for you to learn every time you take a picture. There's a million patterns for you to begin to recognize. So keep it simple at first. Focus on your entries. David, you can do whatever you want. Does it have to be a rule? Can it just be a pattern? So, David, let me give you an example. Why? Why would I do that? Because I don't want to sit still? I guess you could, David. If I have a bad top, my first target's the mid-band. If things go south on a mid-band and all my triggers roll, very often, David, there's a pattern where it finishes the move to the next key Fibonacci area. So what you may do is you may say, if I have a bad top, if I reach the mid-band, if my smalls get above everything and I get a momentum style trade to the upside, I may take a shot. But in order to do so, aren't you fighting triggers? Aren't you fighting direction, right? Isn't there resistance above you that's not likely to hold? David, you can try to make a trade out of almost anything. There's people that try to make trades out of the gap theory. And I can guarantee you, and guys, this is so true. John Novak has spent 27 years recognizing patterns and trying to build something for you guys based off of it. And I can tell you, David, that there's not a bad top trade. But what there is when there is a bad top and things begin to roll, there may be an opportunity based on this pattern to perhaps look for an entry, a momentum style entry to get you up to that next key Fibonacci area. Does that make sense? But we still have to break through resistance, yeah. So David, what you do is you create these patterns in your head because it's a bad top and because the mid-band is reached, I'm not taking this trade. Not worth it because this is a pattern. And now that my smalls are coming up above the large, right? And now that my trigger lines are rolling on the 5-1, I may look for some sort of momentum or breakout trade to get me to that next key fib area. But I still need advantages, right? I still don't want to fight a termination condition. I'm still not interested in a complete lack of momentum. And we'll see how this plays out. But what you'll find, David, is ultimately you may be willing to take an opportunity somewhere right about there or right about there. And look how aggressive that looks. But those patterns may put you in a position to take that. Does that make sense? Cool. So I don't have a bad top rule, but what I do have is pattern recognition that keeps me from looking for the short and helps me exercise my patience bone, looking for a potential long setup a little bit later. Because patterns tell me that when price doesn't reach key Fibonacci areas and everything extends, it's likely that it's going to go up to that next key Fibonacci area. It's not guaranteed. I still need odds favorable, right? Now I've got odds favorable, 50-50. Now I may say, because of this pattern, because of this reaction, because of these trigger lines, and because of these areas that are coming together, I'm willing to take a shot at the long to get up to that next area. Pretty cool, right? 21.3 is bouncing off an area 2. Above or below? So, Paul, there you go. Bad top. Watch out at midband from a bad top. I love it. No divergence. Take one shot. With divergence, would wait for the signal. You get in, quick profits, get out with the divergence. Beautiful. Nicely done, Paul. So, David, isn't that cool? He just kind of showed you how he would do this based on the bad top. He knows that he has to manage assertively. It's not a home run because of the bad top. Paul, that's great. Good timing, too. It really suited the lesson. And then you're waiting for a reversal VAR, Joel. Bad top, pulls back, didn't take the short. And now you're looking. You're welcome. And David, that's what this room is every day. Man, we're going to talk about all the patterns. We're going to talk about everything that we see, everything that it means, how it can help you, how it can hurt you. And then, guys, ultimately, it's your job to create a plan based on what you see, right? I can't tell you to take trades. That's not my job. My job is to help you identify advantages. My job is to help you recognize patterns. And guys, I'm telling you, we are all egotistical, crazy, think that we should be brilliant in the first week. It's that repetition, guys, over and over and over. The more pictures you take, the more patterns you recognize. I got rid of about 7,000 pictures because I re-upgraded. But I'm at 4,500 right here. 4,500 pictures, guys, and this is from November, I think. 5 months, 4,500 pictures. My brother has close to 30,000 on his computer. The people that are really recognizing these patterns in the moment to have the confidence to take these trades without hesitation are the people that are taking pictures, that are annotating charts, that are participating in class, and that are getting that feedback each and every day, guys. And that's the plan. That's your plan. Study hard. Ask a lot of questions, right? Embrace advantages. Be okay sitting on your hands if the advantages aren't present. But take advantage, guys. Every time you ask a question in this room, it's like a private session. 100%. Take advantage of having that coach, having that mentor, having somebody that reads these indicators better than you, helping you read your indicators. Not yet, Joel. I'm doing okay. I still do a lot of my analysis on 7 and only run One chart on 8. So I'm not having any challenges, really. I'm not worried about it. I've got other things I want to spend my money on right now. I'm a traveling tattoo artist married to a traveling nurse, and we're seeing the world. We're sightseeing and having fun. So not yet, but I will. And when I do, I'll get one of those. I'll probably get the laptop from Easy Computers because I've heard great things about them. Heard great things. Guys, I guess that's it for me today. Nearly 60 of you in the room. I appreciate that. I hope that we got a little clarity, a few aha moments for you. Remember, guys, I don't judge you on the trades that you take. I judge really nothing. Just kind of on not at all. So, yeah, every day is a step closer, guys. Every day. Joel, if you know you're going to do it, I'm a big fan of commitment. My computer does what I need it to do. If your computer doesn't do what you need it to do, it makes sense to upgrade, right? But if it's doing what you need it to do, don't worry about it. That's what I think. Debbie, work that management plan. Let me know how I can help. Bobby T, go enjoy the coast. Hey, is it Ross Seisel? 74, that's a hard one. I'm going to call you Ross, but it's great to have you here. Rosie, oh, God, that makes sense. Awesome. So, Rosie, take advantage, man. Ask me every question that you can. And we'll get you exactly where you want to be. The more you participate, the easier it becomes. I promise. You're fishing this afternoon, Bobby? Nice. We spent the weekend in Bend, Oregon. Guys, if you've never been, put it on your list. Holy smokes. And guys, I'll be back tomorrow morning, 9 a.m. We're going to do it again, right? We're going to keep doing it every day until you get to where you want to be. But I need you to ask yourself every morning, what's it going to take to make $300 a day? That's it. It's going to take a few advantages and a great entry and some easy management, guys. Stop trying to be a millionaire on day one. Don't try to lose 100 pounds. Lose a pound a week, guys. Get one step closer every week. Your goals are obtainable. I will see you guys in the morning, and we will do it again. Thanks for being here, guys. Be good.